I want to let you in on something I've been using lately, a remarkably simple scalping strategy that has become an absolute staple for my fast-paced sessions on the 1-minute time frame. The heartbeat of this entire setup relies on a highly unique tool called the Williams Fractals Indicator. By itself, it's interesting, but when I began layering it with a specific cluster of moving averages, its predictive power completely transformed. It is incredibly straightforward to navigate, adapts beautifully to almost any asset class you throw at it, and above all else, it simply delivers results. Let's bypass the fluff and dive right into the mechanics of how I set this up. First things first, open up your TradingView terminal or whichever charting platform you personally prefer to stare at. Right now, I have my own screen locked into the 1-minute intervals, but I want to emphasize that the core logic of this structure will map perfectly across any time frame you choose to trade. Our very first step together is to load up the Williams fractals. To do that, we're going to glide up to the Indicators tab at the top of the screen. Simply type Williams fractals into the search bar and select the classic version right there. The standard, out-of-the-box settings are going to work perfectly for us, so just double-check to ensure the look-back period is locked at 2. Now let's tweak the visuals for absolute clarity. Originally, the indicator prints its bullish arrows as red and its bearish ones as green. That always felt completely backward to my brain, so I flipped the color scheme to green for bullish upside and red for bearish downside. It makes reading the live narrative of the chart infinitely easier on the eyes during high-frequency sessions. With our fractals locked in, we need to establish our macro filter by adding some moving averages. Let's head right back up to that Indicators tab and type in 3 moving averages. You're looking for the specific script created by the developer Advent Trading. The moment that drops onto your chart, we need to hop directly into the Indicators settings menu to customize the engine. We are going to recalibrate the inputs to track 3 distinct depths of market memory: change length 1 to 20, length 2 to 50, and length 3 to 100. To keep our execution completely seamless and free of mental clutter, I always uniform the colors of these lines in a very specific order. I paint the fast 20 period line a bright green, the medium 50 period line a distinct yellow, and the slow 100 period line a solid red. Now that our canvas is fully prepped with all the necessary tools, let's talk about how I actually read these layers to extract winning trades. The absolute gold standard rule of this strategy, the one we never violate, is that I am strictly allowed to hunt for long positions if, and only if, the fast 20 period green line is riding clearly above the medium 50 period yellow line, which in turn must be cruising cleanly above the slow 100 period red line. If the market is moving sideways and these lines are constantly twisting and crossing over one another in a messy braid, it means there is zero directional conviction. In those environments, you must absolutely keep your hands off the keyboard. To be crystal clear, before I even dream of taking a buy trade, my moving averages must be fanned out in perfect, pristine stacked alignment. Green on top, yellow in the middle, red on the bottom. Naturally, the script completely flips when I am looking to orchestrate a short trade. For shorts, I need to see the slow 100 period red line acting as the absolute ceiling on top, the 50 period yellow line holding down the center, and the fast 20 period green line trailing at the very bottom of the stack. Now that we have a flawless visual understanding of what a healthy, trending environment looks like through the lens of our moving averages, let's look at the exact trigger that tells me it's time to risk capital. To trigger a high probability long entry, I patiently wait for the roaring price action to experience a temporary pullback, dipping its toes directly underneath the fast 20 period green line, or scaling even deeper down under the 50 period yellow line. While it's breathing down in that discount zone, I keep my eyes glued to the candles until the Williams fractal prints a clean green upward arrow. The exact moment that green arrow matures on the chart, I have my definitive confirmation to execute. Let me walk you through a clear, real-world example so you can vividly see how this sequence flows in real time. First, I scan the screen to ensure my 3 moving averages are fanned out in flawless stacked order and are running smoothly parallel without crossing. Once that baseline trend is verified, I sit back and watch the candles start to retreat, waiting for the price to cross cleanly underneath the 20 period green moving average line. I keep exercising patience as it drops, holding fire until the Williams fractal indicator flashes, that beautiful green arrow giving me the official green light to enter the market. The very second that candle closes with the arrow intact, I open a long position. I immediately tuck my protective stop loss right beneath the structural safety of the 50 period yellow line, and I map out my take profit target to capture a precise 1.5 risk to reward ratio. As you can clearly see in this specific historical sequence, the strategy unfolded like clockwork. The market caught a bid, accelerated right into our target, and we successfully walked away with money in our pocket. But what happens if the market decides to pull back much deeper than expected? If the price keeps slicing downward through the 20 period line before the Williams fractal can even print an arrow, and it proceeds to cross under the 50 period yellow line before finally flashing that green signal, the protocol remains almost identical. You are still going to confidently enter the long trade right there on that green arrow. The only structural adjustment you're going to make is moving your line of defense. This time, You will place your protective stop loss right underneath the slow 100 period red line, while still maintaining that exact same 1.5 profit target ratio. Now I need you to listen very carefully to a vital non-negotiable rule that dictates whether this strategy actually prints consistent wealth over the long haul or completely drains your account. If the retreating price action breaks so violently to the downside that it closes completely below the slow 100 period red moving average line, you are officially prohibited from entering a trade, regardless of what the fractals try to tell you. Even if the Williams fractal indicator turns around and prints a gorgeous tempting green arrow right after, you must treat it like poison. If you look at this section of the historical tape right here, you can see exactly why. The price aggressively plummeted below the 100 period red line, printed a deceptive green fractal arrow. And the moment a novice trader would have jumped in, the market immediately rolled over and suffered another massive leg down. The math is simple. If the price closes below that 100 period boundary, you completely disregard the next green signal. The statistical probability that the market is transitioning into a structural reversal and will drop significantly lower is simply too high to risk your capital. Now let's reverse our perspective and study an exact example of how I execute a short trade using this exact same methodology. First, I glance my moving averages to ensure the structural health of the downtrend is completely intact, verifying that the 100 period red line is riding cleanly on top, the 50 period yellow is holding the center, and the 20 period green is sustaining the floor. Once that hierarchy is confirmed, I watch and wait for the price to experience a temporary upward retracement, crossing above the fast 20 period green line. From that moment on, I am simply waiting for the Williams fractal indicator to stamp a definitive red downward arrow on the chart. The moment that red signal locks in, I initiate my short position right at the close of the candle. I immediately position my protective stop loss directly above the overhead resistance of the 50 period yellow line, and I project my downside take profit target out to hit that standard 1.5 risk reward mark. There is a deeply psychological component to this style of trading that you have to mentally prepare for. You must learn to completely trust the underlying mathematics of the strategy. The market is rarely a straight line, and there will be plenty of sessions where it takes a significant amount of time before the price finally gravitates to your profit target. Take a look at this trade right here as proof. Our indicators gave us a flawless verified signal to enter the position. We locked in our structural stop loss and our take profit parameters, and then the market proceeded to chop around, making multiple volatile swings in both directions. It spent a considerable amount of time completely going nowhere before it finally caught momentum and hit our mark. It is absolutely paramount that you do not let fear orchestrate a panic sell mid-trade. As long as you have your structural stop loss and your take profit levels hard-coded into the platform before you step away, you are completely protected and you will be perfectly fine. As a crucial operational note, you need to realize that when you are playing the game on a hyper-fast 1-minute time frame, this strategy is going to bombard you with a massive volume of buy and sell signals throughout the day. Because you are going to be stepping into the market so frequently, it is hyper-critical that you ensure your broker or exchange operates with ultra-low trading fees or razor-thin spreads. If you ignore this reality, the sheer volume of trades you are executing will allow exchange commissions to quietly chip away and ruin your net gains, completely destroying your edge. I've just handed you a completely transparent, highly effective winning strategy combining the structural filter of moving averages with the precision triggers of the Williams fractal indicator. All I ask for in return for laying this blueprint out is that you take literally 2 seconds out of your day to hit that like button on this video. If you are curious to see another one of my absolute top tier, favorite trading frameworks that I personally deploy on my live accounts on a daily basis, click right over to check out this next video, and I will see you guys right over there. If you want to skip the painful trial and error of testing indicators on your own and instantly see the exact algorithmic toolset that I use to scan these setups across multiple charts simultaneously, make sure to click on the description below. To join our private trading community where we break down these exact setups live every single morning, click on the description below. For an exclusive discount on the ultra-low fee broker that I personally use to execute these high-volume 1-minute scalps without getting eaten alive by commissions, click on the description below.